If you are 65 or older, the IRS may have quietly overcharged you every single spring, and for a lot of modest income seniors, the real number you owe can legally drop all the way to zero. Before I show you how, do one quick thing for me: subscribe and tap the bell. This channel is straight talk on the benefits and tax breaks the system will never remind you to claim, and I would hate for you to miss the next one. Now let me tell you about Raymond, 71 years old, retired from a warehouse job after decades on his feet. He lives on Social Security and a small pension, nothing fancy, just enough. Every spring, Raymond drives to the same tax preparer, sits in the same chair, and signs where he's told. Then he writes a check he assumes he owes. Last year, that check was more than $800 too big. Not from a mistake. Not because Raymond lied or cheated or missed a receipt, because 2 boxes on his return were never checked. 2 little boxes. That's it. He did nothing wrong. He handed over $800 of his own money that should have stayed in his account, and walked out the door thinking he'd done his duty. And here's the part that should make your jaw tighten. Nobody whose job it is to collect that money will ever call to tell you to stop. There is no letter, there is no phone call. The system does not walk over to your kitchen table and say, "Raymond, you overpaid, let me fix that." It just quietly takes the check. That's the gap this whole video lives in. Being legally entitled to keep your money and actually keeping it are 2 completely different things. You can qualify for a break on paper, by law, and still hand over the cash every year because nobody ever checked the box that turns entitlement into dollars. So here's what I'm going to do for you. I'm going to walk you through 3 real tax breaks for Americans 65 and older. 3. All checkable, all sitting in the actual rules right now. And I'm saving the 3rd one for last on purpose because it's the simplest of the 3 and it's worth the most. If you act on only one thing you hear today, it's that one. Stay with me to the 3rd one. It's the easiest and it's worth the most. Now, I already know what some of you are thinking. Walter, that's for poor folks. And someone else out there is thinking, that's for rich folks with fancy accountants, not me. Stop. Both of you. Stop right there. This is not only for the low-income senior scraping by on Social Security, and it is not only for the retiree with a healthy pension. On every single item, I'll tell you exactly who it helps most, so you don't quietly count yourself out at your own kitchen table before you even hear the numbers. My name is Walter Hayes. For over 15 years, I've read the fine print of these programs, the tax code, the county rules, the forms nobody mails you for ordinary families. I'm not selling anything. I don't work for the government, and the government does not send me a dime. I just read the rules so you don't have to. And because I read them, I'm going to clear up the biggest myth first, the one baked right into the title of this video. Let me be honest with you, even about my own clickbait, there is no new IRS law that gives every senior a 0 tax bill. None. If somebody online is telling you Congress just passed a magic button that wipes out taxes the day you turn 65, they are wrong, and they are getting you excited about something that does not exist. Here's what is true. After 65, 3 real provisions already sitting in the tax code stacked together, one on top of the other. And for a modest income retiree, they can legally erase the tax bill down to nothing, not lower it a little. Erase it. But, and this is the whole game, only if you claim them. The law hands you the right. It does not hand you the money. If you've ever signed a tax return without knowing what half the lines meant, and be honest, most of us have, this next part is for you. Because here's the thing about these 3 breaks. They don't show up with a flashing light, they don't have their own headline on the news, they hide inside lines you've been signing for years without a second glance, and the very first one is the perfect example. Item 1. The extra standard deduction for age 65 and older. Let me say that in plain English. You already know about the standard deduction. It's the flat amount the IRS lets you subtract from your income before they even start counting what you owe. Most people take it. Fine. But what most people never hear is this. Once you turn 65, the IRS adds an extra amount on top of that regular standard deduction just for having reached that age. And if you are legally blind, there's another additional amount stacked on top of that. Extra money coming off your income automatically owed to you by the rules for the simple fact that you got older. That is, money with your name on it. So why does anyone miss it? Because of where it hides. This extra deduction doesn't get its own bold line that shouts, "Hey, you're 65, here's your bonus." It folds quietly into the standard deduction line. It lives inside a checkbox. A little box near the top of the form that says you were born before a certain date or that you're blind. Check the box, and the deduction gets bigger. Miss the box, and the software or the preparer just uses the regular number and you never see the difference. Good tax software usually catches it if your birth date is entered right. But if you file on paper or you're sitting across from a rush preparer buried in April returns, that box gets skipped constantly. Nobody's being evil. The preparer's got 40 returns that day and your file looks like everyone else's. The box just doesn't get checked. And that right there is one of the 2 boxes that cost Raymond his $800. That extra slice of deduction for being 65 sounds small, but I'm about to show you the actual dollars it pulls out of your taxable column and why the exact sentence you say to your preparer decides whether you ever see a penny of it. That extra slice for being 65, here's what it's actually worth. On top of your regular standard deduction, the IRS quietly stacks an extra amount just for having turned 65, and another on top of that if you're legally blind. For a couple filing jointly, where both are 65 plus, those extra amounts add up, and they can pull a couple $1,000s of income straight out of the taxable column. Real money with your name on it. But only if the box is checked. Let me slow down on what that actually means, because the mechanics matter. That extra amount doesn't shave a few dollars off your final tax. It comes off the top of your income before a single dime of tax is even figured. So we're talking about a couple $1,000s of income that the IRS simply never touches, never taxes. Gone from the column that costs you money. Translate that into your kitchen, not a spreadsheet. Couple $1,000s of income that never gets taxed, that's a season of groceries and a winter heating bill you get to keep. That's money that stays in your account instead of going to Washington. A couple $1,000s of income the taxman never touches. Read that again. So who does this help most? Everyone 65 and older, honestly, but especially 2 kinds of people. The first is anyone who still files on paper, the old-fashioned way, at the kitchen table with a pen. The second is anyone handing their shoebox of documents to a rushed preparer in March. Here's why. The tax software should catch this automatically. Should. But paper filers miss it constantly, and a preparer moving fast through a stack of returns misses it too. It hides right inside the standard deduction line, so it doesn't wave a flag. Nobody mails you a reminder that you turned 65. Being legally entitled to that extra deduction and actually getting it subtracted are 2 completely different things. So here's your exact action, and it costs you 1 sentence. When you file, or when you sit down with whoever prepares your return, confirm that your birth date is entered and your age box is checked. Then say this, word for word. I turned 65. Did you add my extra standard deduction and my blindness amount if it applies? That's it. That one question forces someone to look at the line and confirm. Don't assume the computer did it. Ask. Now, that was item 1. Real, but modest. The next one is narrower, and it works in a completely different way, and for the right person, it comes straight off the tax itself. It's called the credit for the elderly and the disabled, and it lives on a form called Schedule R. Here's the difference in one breath. The extra deduction lowers your income. This one is a credit, and a credit comes straight off the tax you owe, dollar for dollar, not just off the income the tax is figured on. That's a stronger tool. When it applies, and there's the catch. This credit is narrow. I won't sugarcoat it. The income limits are strict, and much of your Social Security counts against it, meaning the very checks you live on can push you over the line and disqualify you. So it isn't for everyone. But for a genuinely low-income senior, the right one, it can knock hundreds off the tax owed. Hundreds. And here's the quiet cruelty of it. Nobody mails you Schedule R. It isn't stapled to anything. It doesn't show up in your mailbox with a friendly note. It's a form you have to know exists and ask for by name. So eligible seniors, people who actually qualify, leave it on the table year after year after year. Not because they did anything wrong, because nobody ever handed them the form. Let me put a face on that. And let me be honest with you, she's not a real client. She's an illustration, so you can see how the gap works. Picture a widow. I'll call her Margaret 68. She lost her husband a few years back, and now she lives on Social Security plus a tiny annuity, a small monthly payment from an old policy. Her income sits low enough that she qualifies for that credit on Schedule R. But every spring, she signs where she's told and pays what she's told, and no one ever put that form in front of her. For years, hundreds of dollars, she was legally entitled to just sat there, unclaimed, on the table. Then one year, someone at a free tax site looks at her numbers, pulls out Schedule R, and walks her through it. And the return that used to leave her a little short instead comes back with a few $100s she never expected. Same income, same Social Security, same tiny annuity. The only thing that changed was that somebody finally handed her the form. If you're a widow or a widower on a fixed income, this is the sentence I want you to keep. Write it on the back of last year's return so it's there next spring. Because Margaret's story isn't rare. A surviving spouse, living lean, is exactly who this credit was built for, and exactly who never hears about it. So here's your action on item 2. It's another single sentence. Ask your preparer, or ask the volunteer at your local free tax site this: do I qualify for the credit for the elderly and disabled on Schedule R? Say it plainly. If the answer is no, fine, you lost nothing but 10 seconds. If the answer is yes, you may have just found money with your name on it that's been sitting there for years. You don't dig for it. You ask for it out loud. And notice what both of these have in common: the extra deduction, the Schedule R credit. Neither one shows up on its own. Neither one gets claimed because you're entitled to it. They get claimed because someone checks the box, or asks the question, or pulls the form. Being entitled and actually getting paid are two different things. You're seeing it now, twice over. So far we've done real, checkable money. A deduction most people never confirm. A credit nobody hands you. Both worth having. But if you've been waiting for the big one, the lever I told you to stay for at the top, here it comes. And it's different from these two because there's a third thing. And it's not a deduction you dig for. It's not a special schedule you have to ask for by name. It's a single box. A box that says you're 65, and that one box quietly decides whether many seniors owe a lot of anything at all, or whether they should even be sitting there filing and paying in the first place. Think about that for a second. Not just paying less, possibly not needing to file, and not needing to hand over a check at all. That's next. The one I told you to stay for. It isn't buried on some special schedule. It's the box that says you're 65 and the higher filing threshold that comes riding along with it. Because your standard deduction is bigger after 65, many seniors living on Social Security and a modest pension owe zero. Some don't even need to file at all. Yet, every spring, they sit down, scared, guess, and hand over a check anyway. Here's how it works. In one breath. After 65, that fatter deduction lifts the income level where you start owing anything. The line moves up, so the little age box on your return quietly decides your whole bill. Not one detail on some form you've never seen. That box, and this is where the trap lives. Being legally entitled and actually getting paid are two completely different things. Nobody tells you the threshold moved, so you file frightened. You round up to be safe. You skip refundable amounts you had every right to. Or you march in, sign where you're told, and pay tax on income that was never taxable in the first place. Don't guess. Let the application do the math. That's the whole trick with this one. You stop deciding it in your head at the kitchen table, and you let the numbers land where the law says they land. So here's your action, and it's the easiest one in this whole video. Before you sign anything, confirm the age box is checked. Then look your preparer in the eye and say this: I'm 65, I'm on Social Security and a modest pension. Check whether I even owe and whether I need to file at all before you have me sign anything. That one sentence flips the whole conversation. It puts you in charge of the return instead of the return being in charge of you. Now let's add it up, because this is the moment the whole video has been building toward. This is the one I told you to stay for. Do not skip it. Take a modest retiree, 65 or older, living on Social Security and a small pension. Start with the regular standard deduction. Now stack the extra standard deduction for being 65 plus on top of it, that slice of income pulled clean out of the taxable column. If the income sits low enough, add the credit for the elderly and the disabled on Schedule R, knocking dollars straight off the tax owed. Then file it correctly with the age box checked so the threshold sits where it actually belongs. Watch what happens. Those three real provisions don't just trim the bill. For the right, modest income retiree, they can wipe it out. Not lower it, erase it. That's the honest version of a zero tax bill. There's no secret new law. There's no gift from Washington. There's just three ordinary rules that already exist, stacked together the way they were meant to be stacked, doing exactly what the numbers say. That's the difference between writing an $800 check and owing nothing at all. $800, that's a month of groceries. That's the heating bill through winter. And it was never a mistake. It was money with your name on it, left on the table year after year. Remember Raymond, 71, retired from the warehouse, living on Social Security and that small pension. Every spring, he paid his preparer, signed where he was told, and handed over a check he assumed he owed. He overpaid by more than $800, not from a mistake, because 2 boxes on his return were never checked. 1 corrected return would have ended it. 2 boxes. The extra deduction added. The age box confirmed. That's all it would have taken to turn his check into nothing owed. He did nothing wrong. He just never knew the option existed. Now you do, and nobody whose job it is to collect that money was ever going to call and tell him to stop. That's the quiet gap this whole thing lives in. The intention behind these rules is good. The system is simply not set up to walk over to your kitchen table and point at the box. So here is exactly what I want you to do this week. Not someday, this week. 1. Pull out last year's tax return and put it on the table where you can see it. 2. Call your local VITA site, that's Volunteer Income Tax Assistance or Tax Counseling for the Elderly, TCE for short. Both are free, both are built for exactly this. You can find your nearest site through the IRS website or by calling 211. 3. When you get someone, ask 2 things by name. Ask about your extra standard deduction for being 65 and older. And ask, do I qualify for the credit for the elderly and disabled on Schedule R? 4. Confirm your age box is checked on this year's return before you sign a single thing. 5. Mark the filing deadline on your calendar right now, in pen, so it doesn't sneak up and scare you into guessing. 5 small steps. That's the whole plan. That's the difference between another year of overpaying and a return that finally does what it's supposed to. Now, one warning, because a scam always follows the money, and this benefit has one shadowing it. The IRS does not call, text, or email demanding payment or bank details. It doesn't happen. If someone reaches out claiming you owe and they need your card number, your bank number, a gift card, anything, right now, on the phone that is a thief wearing the government's name, it is not the government. So if a caller says they're the IRS and wants your bank number, stop, hang up. Say it with me. Stop, hang up. You go to them. You never wait for them to come to you. The real IRS sends letters on paper, and you can verify every one of them by calling the official number yourself. Fear is the whole scam. Don't hand it your bank account. One honest word before I let you go. This is general education, not personal tax advice. Rules vary by state and by income, and your situation is yours alone. So confirm the specifics with your VITA or TCE volunteer, or with a qualified professional who can look at your actual return. I read the fine print so you know the questions to ask. The final answers get checked against your own numbers. And here's the last thing, the one that matters most. Everything I just told you, most people over 65 will never hear. Nobody official is going to call and explain it to them. No letter is coming. The preparer who's rushed won't mention it. The box will stay unchecked, and the check will keep getting written quietly every single spring. So do one thing for me. Send this to one person over 65 you love. Your mother, your father, the neighbor who lives alone and pays her preparer without a word. Because you might be the only one who tells them. You might be the whole reason their bill goes to 0 this year instead of costing them $800 they didn't owe. Raymond didn't know the option existed. Now you do. Go check the box. Make the calls this week, VITA or Tax Counseling for the Elderly, the extra deduction, Schedule R, and pass this to someone who needs it. Because nobody official's going to. That job is yours now, and you're ready for it.